Kia ora koutou katoa. John Holt here from Territory 3. It is my great pleasure to be joined today by Nick Crocker from Blackbird Ventures. Nick, g'day, across the Tasman.
Hello. Yes, great to be here.
This is a really exciting session. It's kind of a recall because I think a couple of years ago, shortly after having visited in one of our landing pad jams, Nick did a couple of these sessions and they were really well received by the community. There's just never enough feedback you can get on pitching your baby, your venture to the world. So really appreciate you taking the time, Nick. And I thought one of the first things we could do, just for some of the newer people in our community visiting today, is just tell us a bit about yourself and your journey from entrepreneur to VC.
Yeah, awesome. And before entrepreneur, there was a step where I was a pretty ordinary law student, and I worked at a construction law firm, and realized that I would never be great at that. So on the side, I was working as a journalist, and I was a music journalist. And so I just loved music and the internet. And the first company I ever built was around helping people discover music on the internet. And it was a site called We Are Hunted, which was popular in the 2009s, whatever you call them, and ended up being acquired by Twitter and briefly becoming Twitter Music, and then briefly after that shutting down. And then I did a healthcare company called Sessions, which I'm proud to say was the third company that Blackbird, the venture capital fund that I now work for, ever funded. So I was a Blackbird founder in the very early days. I'd be really proud to be associated with Blackbird, first as a founder and now as one of the 4 partners. Now my job is spent finding founders to support and supporting founders that I've found. So it is a great privilege to sit alongside people doing their very best work. And so I feel deeply grateful for this job and all the ups and downs that it brings.
Very cool, very cool. So maybe in terms of your current gig, just tell us what a day looks like, and I guess what you most like about it, and maybe what challenges you a little bit about it.
Yeah, I would say the primary role I serve is as a support to the founders that I work with, and that can come in so many different forms. So if I think about just this morning alone, we've been talking about ESG with a founder. We've been doing PR with another founder as they launched their fund. Yesterday we had a board meeting with Eucalyptus, one of the companies that I'm on the board of. I'm doing a CEO review for one of the founders that I work with. It's just this basically whatever the founder or the company needs at that time. This afternoon, I'm closing candidates for a company. I'm doing 2 candidate closing interviews for 2 separate companies. So I think of my role as a service role, really, and I serve the founders and particularly the CEOs that I invest in. So that's a huge part of my work. I would say that's 10 hours a week. So kind of a quarter of my time is spent there. I try and spend about 5 hours a week meeting new founders. A really important part of my job is to meet founders at all stages, but the most fun that I have is meeting founders when they're really early and don't really have much to show except an idea and a set of thoughts. And that's the greatest joy I get, is that really early stage, because that's the point at which the potential energy is the absolute highest. And then I'm a partner and an owner of Blackbird, and so there's a huge amount of responsibility that comes with managing $1 billion of capital and a team of almost 40 now. So increasingly, I'm thinking about how we build a generational organization that can outlive all the current partners and be a place where people come and do their life's work. So portfolio companies, new companies, and then sort of supporting Blackbird, which is really a startup in and of itself.
Very cool, very cool. And we're delighted to have Blackbird now established in New Zealand for I think probably 2 years through Sam, at least now. And so really truly an Australasian fund and a great sort of purposeful focus. So we've got 3 pitch decks for you to go through today, and I think that's the crux of today for a lot of people watching. But I just thought, because we have a high variance, as in the community, from folks even just sort of thinking about getting out of their day jobs, trying something new, through to 3-4 time founders. Before we get into those, can you give us a bit of a flavour of sort of what I call the feeds and speeds? So you've got an allocation of time, as you said, to looking at new stuff. What are the sort of numbers around that? What are you looking for? And maybe, you know, how does that line up to Blackbird's thesis as well?
Yeah, awesome. So I would have, over the last 3 or 4 years, I would have looked at a bit over 1,000 different companies. Like, it's probably more that have hit my inbox, but you know, I've properly looked at about 1,000. In that time, I've written 10 term sheets. So, and a term sheet is the document that I send to a founder to say, I would like to invest in your company on these terms. So, if you flip that around, that means that I said no 990 times out of 1,000. So I think one of the surprising or unknown parts of this job is how often it is about saying no to founders who, you know, for me, I'm always sort of saying no to founders who I think are better founders than I was when I was a founder. So it's a bit of a weird feeling, but I think from the founder perspective, I think that's an important perspective, because what you're trying to do when you're trying to get in front of an investor as a founder is just to grab their attention in a really quick, easy, and compelling way. And so when I explain to you my week about portfolio companies and the team at Blackbird and new companies, and I would say I and most people in my position are pretty, as we all are, pretty time constrained. And you don't have, you know, 45 minutes to read every pitch deck. So most times I'll be taking, you know, if I spend 30 seconds on a pitch deck, that might be a long time. And you build up what's called pattern recognition, where you see thousands and thousands of these pitch decks, and you can just start to tell what's good, what's bad. And I think the most interesting thing is how often founders think they're saying one thing in the pitch deck, but what I'm interpreting is very different. And so what I try to do in these sessions is to tell you exactly what I'm thinking, so that you can understand a little bit of the sort of what gets implied. So yeah, this is a really, really critical founder exercise to get time with investors if you're going to go down the venture capital journey. And the way that you do that is often through an email introduction or a cold email to an investor. And the way to get attention, you know, what that investor is looking for, they'll say, send me your deck. And the deck is just sort of the pithy summary of you and your opportunity, and being a compelling communicator in that context is really, really important. So I think it's something I really love. You know, I came from a journalism background, so I love seeing good stories told, and I look for those great stories in these pitch decks.
Very cool, very cool. And look, just one more question before we actually rip in and just have a look at these pitch decks. And thanks for the folks who have provided them to us as well. It's quite a big vulnerability to do this live. We've got about 120 folks online with us, and this will be viewed, if it's the same sort of history to Nick's last one, you know, many hundreds of times offline too, as a real sort of support mechanism for people to refine their message and their story. But Nick, you know, is there any one thing in particular, you've been doing this for quite a few years now, that sort of changed distinctly in your view or your approach of how you look at these things, perhaps through sort of reflections on stuff you passed on or things you went forward with that would be different, you know, based on your experience now?
Question. I would say it's I've always said you've only got 30 seconds. I think I used to say you've got a minute to make an impression, and I think I was being too generous. I think it's more like 10 seconds or 15 seconds. And you know, I'll show you when I go through the deck the speed at which I would scroll these decks as if they were coming inbound to me. So I think people still underestimate how quickly you need to get your message across, and I think they underestimate how little work recipients like me do to understand a story if it's poorly told. If the story's poorly told, we'll ignore it. We won't sort of dig in and read it and research it. We'll just assume if it's not a clear story, it's not a good story.
Very cool. Makes sense. All right, mate, I'm going to give you a bit of space to get ready to share your screen. So folks, we do have obviously on Zoom the capability for questions. I'm going to be a bit of a curator of those. We're obviously going to go through the three pitches. We'll get to as many questions as we can, but obviously the objective of this session is to really make it as valuable for you in terms of time seeing Nick go through these, but also fire off some questions too. So if you do have anything, please do fire it into Zoom as we go. Nick, the floor is yours with Wing Acoustics.
Awesome. So yeah, I'll set this up a little bit as well before we jump into the decks. So John's already mentioned this, but I think if there's 127 people on this call, but only 3 were brave and bold enough to put their decks forward for critique. So I'm the one speaking, but I'm not the sort of hero of this story. The hero of this story is the 3 founders that put their deck forward to be critiqued in front of everyone else. So I just want, if you're sitting there and you didn't put your deck forward and you think, yeah, this is shit, I would have done it so well. Well, you didn't send it forward, so we can never know. So I just want to kind of acknowledge the bravery and set the hierarchy of I think it's a privilege to be able to digest this information. I kind of just want to honor the bravery and the effort and the willingness of the founders that did submit theirs. I think the other thing is, if I was in this position and I was doing a pitch deck, I would make a bunch of these mistakes as well. I'm very experienced now at reading pitch decks, but I know for sure that if it was me in this position, I wouldn't be. I have some expertise in this, but I know that as a founder, I would make the same mistakes. And so, again, I'm not coming at this as a expert on high, kind of whacking people for making mistakes. In the same position, I would do the same thing. I've opened these up as I would open them up. If they were sent to me, I would just open them straight up. I wouldn't download them. So I've opened them up as I would visualize them straight from my inbox. So I want to give you the experience that I would have had you sent them to me on email. And then I guess just finally, you might think, this is just a pitch deck. It's just 15 slides. It's not even the real story. But one of my favorite sayings is, if I had more time, I would have written a shorter letter. And it's this idea that actually the hardest thing to do is to write something short and concise. And the easiest thing is to explain things in thousands of words. And so I actually think the ability to tell a compelling story in a short space of time is one of the key founder skills. And it's a key founder skill because it's going to help you raise money. It's going to help you to communicate with your shareholders once they're on your board or once they're investors in your company. It's going to help you communicate internally with your team. It's going to help you communicate to employees that might want to join you. And all of those people are looking for a simple, compelling story to understand and to buy into. And you, as the founder and the CEO, will find yourself repeating that story over and over and over and over again. And if it's a good story, you'll get better shareholders, you'll get better employees, and then ultimately you'll build a better product because you'll be telling the story to customers in a really compelling way. So I actually think founder storytelling is one of the big underrated soft skills. And it's I respect it enormously in the founders that I back. And I don't think it should be underestimated how much can be about a founder can be captured in just a very short pitch deck. So with all of that set up, let's dive in. So the first deck here, and just so you know, I haven't looked at these decks before, and so I'm going to basically live read. So first thing I look at is 15 slides, which is about right. I always think 12 slides is about the right number. 15 probably means you could have deleted 3, but world's purest sounding loudspeaker drivers sounds good. The first thing I'm thinking about in this is, if you're going to build amazing audio equipment, you have to have an amazing team. And so the thing I'd be looking for in the team slide is like, audio engineer from Bose, or I don't like that. That's the next thing that I'm kind of wanting here. I'm like, well, what would make me believe that this sound is going to be amazing? I'm a big sucker for mission, vision, and values, so I like mission there. Okay, so now this is a really interesting slide. I love team slides, and I love them to be at the front, because if you think about it, like a pitch deck is a non-fiction book. And a really important input to a non-fiction book is the credibility of the author. So People who leave the team slide to last don't, you have an opportunity by establishing your credibility up front to make all the slides that follow much more compelling and believable. So key team members, hey mate, you have to.
Said that one of my
Hey,
things
mate.
have arrived.
Yeah, you have to go to the post office and pick it up with mum. Here. Don't come back in.
And Nick, who's really pitching, evaluating these decks for you in your life? Is it really you? You've got a sidekick, haven't you?
I have a 5-year-old sidekick who got some Lego delivered and felt the need to break my rule of not coming into my room when the door's shut. Anyway, I can understand. Cool. So I don't mind this slide. An engineering scientist, lead IP creator, and cellist doesn't tell me a huge amount about any of the founders. Like I would love a number on this slide, and it's great that it links out to LinkedIn, but I wouldn't do that immediately. I think as a weird thing, I would interpret this as these two people are full-time and this person isn't full-time, but then actually it looks like he is the CEO. So my immediate thought, and maybe I'm completely wrong about this, is Chris is not full-time, but Michael and David are, or that there's some story in the founding team here, just visually by this split, that I don't really understand. So there'll be a puzzle there for me to dig into later, and I'll have to go into the LinkedIn's. But at this point, I'm like, I'm going to keep looking to see if it's worth even clicking out to the LinkedIn. Okay, problem, distortion generating loudspeaker is ruining. Okay, cool. So I just sort of think, okay, my speakers could be better. I'm sure that's true. Acoustic wing, sound pro. Okay, so this is too many words for me, and I'm not a good judge of this. Like, mimics the action of a bird wing in flight. I don't know whether that's a good thing or a bad thing. So I'm just going to keep going. Looks, moves, sounds like no other. Okay, validation. Okay. Here's the interesting stuff. Basically, anytime you see a dollar, like the dollar symbol in the deck, that's an interesting piece of data. And I'm always surprised at how far down the decks the dollar symbol is. So reviews are fine, but I guess keep in mind that every pitch deck I see has reviews in them, and all those reviews are positive. So I don't even need to read those. And it's not differentiated in any way to every other pitch deck, although maybe you could argue that StereoNet and Hi-Fi Choice Magazine and Sound and Music are great publications, but I don't know that, so I'm just going to assume it's positive. So 20 pairs sold at up to $5,000 a pair. Pay attention to the language, because if they were sold at $5,000 a pair, then that's 20 times $5,000. But up to indicates that a bunch of them weren't sold at that price. So now I'm like, well, why weren't they sold at $5,000? And 17,000 visits in 2 weeks. I don't know, there's something about this that makes me think the 17,000 visits was not in August of 2021. And maybe it's just the fact that the date isn't there, but the fact that the date isn't there tells me, like, if it was recently, you would have told me. So 20 sales of $5,000 pair, so that's a good start. It's definitely, anything above 0 sales is a good start. But this signals to me very early product. This is a seed round. TAM, TAM's fun. It's big. I think headphones in particular have. Oh wait, hold on. Now we're talking about headphones. Sorry, I'm confused now. Again, I'm just being transparent in how my brain is working, not being critical for the sake of being critical. But headphones have sudden. Wait a second. I thought these were speakers. Anyway, unclear to me at this point. 8 slides in, if I'm looking at a company that sells speakers, headphones, or both. Oh, that's the second target vertical. Anyway, too confusing, so I'll keep going. Very small text. Okay, so crowdfunding, 8,000 units. See, I don't know. Okay, so this is stuff that hasn't been done yet because we sold 20 speakers. Okay, a bit more confused now. Competitive, separate is misspelled. Wing, independent audit, IP in a strong position, 13 patents. Okay, not sure. Why now? Okay, not sure. Okay, more dollar signs. Raising 3 to get to 4 in the next 24 months. I think that's okay. I think I would say at the moment, in my direct-to-consumer perspective, is that the bar when you're doing one-off physical sales to get to 4 million US in 24 months would be somewhere on the scale of bad, average, good, great. That's between average and good. I would say, yeah, that seems low. So the implication here is that there's no marketing expertise in the team because the ambition is on the sales side isn't high enough. So yeah, and the pie chart, just hard to kind of. It's so visually confusing that you just go, I can't even line that up. And is that 50% or 31% or anyway, it's going to be spent on a whole bunch of stuff. And then I don't know what the difference between runway. Like usually I don't like anyway, so that's confusing. Okay, so again, just more validation. So now we're back on headphones with more reviews. Do I know any of the reviewers? No. And then it ends. Okay. So what do I know? I know that you're raising 3 to get to 4 and you've sold 20 pairs at $500. No. 20 pairs of speakers at $5,000 a pair. So some big open questions for me coming to the end of this deck is this a speaker company or a headphone company or both? Where in the process are they built and can you go to market today? Can I buy them, or is there some step between now and then? I've got questions about whether the founding team are all full time, and just there's something about this slide that makes me think I've got to dig into the ownership structure of this company a little bit more because something's up here. It definitely comes across as credible in terms of like technically credible. Like I do believe that these founders are like sound experts, but there's enough missing in the commercial story to tell me think that that's a gap. And maybe that's unfair given the experience of the team, but there's just, it's just a mixed story, pretty wordy. And then I just think there's, one thing I really believe about these premium products is you want really high quality of visual design on the website, in the product, on the packaging. And I guess there's a little flag in my mind that the quality of the visual design here, like I don't think that font choice sort of sings, and just like different bolding and font sizing and all that sort of stuff just makes me think there's not that really deep design DNA in the company. And even if it's not in the company, like you would have just paid someone $500 to make this just look incredible. Go on the Apple AirPods site for that sort of sense of what crisp visual design looks like. So yeah, in summary, high quality founders. Would I take this meeting? I think you probably do 30 minutes just to figure out what's going on here, but you come in quite biased on the commercial side of this, and probably I come in on the bias that I'm probably not going to do a $3 million US round until I see a little bit more traction. And so I think the biggest missing link from the pitch is I just don't know what kind of company or product I'm funding here. Is it speakers or headphones? So that's 10 minutes on that one. I guess there's been a bunch of chat and Q&A I haven't been looking at.
Yeah, I was just going to say, Nick, folks, great to see some shout outs for people in terms of putting their deck up. But if you have a specific question, there's another button for Q&A, which just helps us sort of stream that easily. So if it's a question, if you can just look for that ask a question or Q&A button and chat. Love the chat as well coming through in terms of some encouragement and so forth. So just a technical reminder there.
I'm just looking at the chat, so I'll just respond to a couple of things that have come through. So how often are decks reviewed on mobile? I would say as a cohort, investors are looking at decks on mobile most of the time. I deleted Gmail from my phone. I don't look at email on my phone because it just permeates every aspect of my life. So me personally, I never look at them on mobile because I can't. Adam asked how do you decide how much capital to invest and what percentage in super early stage startups? So the answer to that quickly is, we want 100% of it in super early stage startups. We don't always get that because we sometimes meet the founders too late, but the perfect number is 100% in super early stage. And then how much capital we invest is generally, so in this business, there's a really clear ask for $3 million to get to $4 million of revenue. So that fits the kind of check size that we like to write. And it would just be up to us having a conversation with the founders. We just did a round where the founders asked for 1 and we ended up giving them 5 because we felt like 5 allowed them to do a bunch of things that, gave them 2.5 years to do a bunch of things versus 12. Are there specific uptake, Adam asked, are there specific uptake metrics you look for in a SaaS company that determine if it's worth investing in? Yeah, ARR growth, net revenue retention, NPS, churn, all the kind of basic blog posty, there'll be lots of blog posts over there and we look at, we're no different to what we look for. That SaaS businesses are super well understood now, which is quite cool. Have listened to the speakers at Wing Acoustics, can confirm they are the clearest sounds in the world. So excited for the future. Cool, that is a high praise. Big respect to those working from home with kids. Yes, everyone now fortunately appreciates the fun little interjections we get. Wing, yes, shout out Wing for doing that. That was longer than 30 seconds. Is that good? So I was going slow because I was commentating. It would have been, basically I just spoke for 10 minutes about what would have taken 10 seconds to think through as I scrolled through. And yeah, another shout out. Adam asked, am I interested in whether the team is full-time and part-time? Yes, I don't invest in part-time founders. And I don't invest in founders who are building the startup on the side. And I don't like when founders say, I'll go full-time when you give me money. That's always a red flag. Oh, sorry. Question from the Wing deck, what appealed in the first 30? The thing that really jumped out is there was a credibility that came through. And so I just think there's some really like epic engineering scientist brains going into this. I felt a lot of confidence from the first 30 seconds that was going on. Another person shouting out the Wing speakers. I have to listen to some. Speaker drivers. Drivers are a key component of any speaker, headphones or standalone speakers. Okay, cool. That's a good point, right? So I'm on the board of Nura, headphone company. So I'm clearly not totally across audio tech, but I know enough. And so you should assume that I'm at least the baseline of intelligence of investors when it comes to drivers. And I think your go-to-market for headphones or speakers and your total market size are very different. So again, I just think you want to be more upfront about that. Do you want to see a founding vision and mission up front? Yes, I love that. Not needed, but I do like it. Am I comfortable sharing a pitch deck of yours? Yeah, I can dig up the sessions pitch deck. It's a long time ago. And Chris is going to simplify the deck down even further. Awesome. Should you state runway?
Sorry, Nick, just on that sharing your pitch deck, folks, on the KLP Academy, Nick's original webinar is actually there where I believe you critiqued your own sessions pitch deck.
Yeah,
so
yeah.
It's already sitting up there on KLP Academy if you want to download.
Awesome. Yeah, that's great. I thought I might have done that. Yeah. And I look at it now and there's a lot I could have improved. Should I state runway period and next round size? Yep, I think that's a good idea. I'll generally calculate it for myself by going, your runway from this round will be 18 to 24 months and your next valuation will be 2 to 3x this valuation, and you'll give up 20% of the company at the next round. So that will dictate the round size. So I can generally calculate it for myself. And drivers. Okay, cool. Mick said, are you okay to get a deck well before a capital raise to build relationships? Yes, definitely. Chris said we have reinvented the loudspeaker and it will go into multiple products. Oh, that's good to know. All right, awesome. and the link has been sent. Okay, thank you for all those questions. A few raised hands. Again, I'm screen sharing and going through chat, so apologies for the. And John, just tell me to stop doing this if you.
Yeah, no, that's great, mate.
You
You maybe rip into the next one, and I'll just do a bit of streaming of the questions for the next break. We've got 2 more to go.
Okay,
obviously.
cool. And the people that are raising their hands, I might just keep going, but maybe drop a question. John, you want questions in Q&A or chat?
Q&A.
Yeah, for people that
Q&A, yeah.
Nick, I'm sorry I haven't been able to get to your question, but if you can drop it in the Q&A and not the chat, that would be most appreciated. Okay, cool. Let's jump into Amplifier. Cool. Let's start from scratch. So Amplifier. So the first thing that jumps out of this is I opened, it's been sent to me as a PowerPoint, and I think if I downloaded this and opened it in PowerPoint, that this would be rendering in a different font. But because basically the lesson is send PDFs, don't send PowerPoints, because PowerPoints look cooked when you open them. So visually, this suddenly looks weird, and just little things like this is half blue and half white, and yeah. So visually, first thing you go like, okay, this just looks cooked. So, and again, there's just these small things that you pick up. Helping people succeed by unlocking relevant relationships. I like it. Found a slide. Again, good to link out to the LinkedIn. You want to be sure that the recipient knows these 3 organizations. So you might want to add some words to this slide that shows the impact that you've had. Problem is global shift to virtual events, relationships, people miss out, agree. It's a virtual event platform designed for building relationships, speed networking, and smart matching. Cool. Let your attendees create their own lineup, default smart matching. Cool. Virtual event market's big. Freemium model, $100 a month, projected revenue at 1.25 million hosts, $3 billion of ARR. Ooh. That is, I guess like that's the first thing that jumps out is it's a fine line between loving the ambition and the number being so outlandish that you go, okay, like I'd be $100 million of ARR would be a spectacular achievement. At $100 million of ARR, you're a unicorn. At 3 billion, you were more valuable than Atlassian probably. So that seems like this would indicate like a commercial, like there'd be a commercial lens on this business that I'd be sort of questioning there. So the traction is 680 connections made. So this is a good sort of point to pause on. So traction is really only expressed one way, in dollars. If you express traction in any other way than dollars, it's kind of the same as saying we don't have much traction. So it's good that you called the slide traction, so I'm judging it as a traction slide. You can probably tell the story of having made 680 connections without I think there's a better way to tell the story about 680 connections made. All I take away from that is like, okay, we've got a live product in market, and that's a good thing. 3 paying customers, and again, when you're talking average score of 80 from an N of 3, I don't think you need to do averages. You could just say 3 paying customers. There's NPS is an average, so NPS across 3 paying customers is kind of a weird way to measure it. 11 pilot customers with member pools of 580,000 people. That just begs the question for me of, okay, they've got those member pools, but how many members have they actually onboarded to the platform, to Amplifier? Go to market, freemium events, distribution partnerships, direct approach. I would probably delete this slide because these are all sort of table stakes go to market efforts versus there's nothing in here where I go, wow, that's a really compelling go to market from a founder that understands go to market. Those would just be the basic obvious things that you would do. Defensibility, machine learning, data moats, supercharged by observing users. Okay, cool. Well, I want to see a machine learning engineer on the team today if that's really going to be a moat. Distribution partnerships with event sponsors that will impact metrics. Not sure what that means. Deep understanding of connecting people at scale. I don't think that's a defensibility thing. Closed a note not sure what 150, closing a note, 155K organized. I don't know what organized means. Like closed would tell me it's done. Organized means maybe it's not done. Would love to help connect the Blackbird community. Cool. Okay. What would I take away from all this? I mean, I guess I have the extra context here of having spent half an hour with Casey one-on-one. So I actually know what a compelling person he is. And when he says down here, deep understanding of connecting people at scale, one of the things that jumped out, having spoke to Casey about this, is he actually really is thoughtful about how people connect digitally. So I'm a little bit, it's a trickier one because I have a little bit of extra context having spent time with Casey's. But as an imagining that I was only seeing this for the first time, I probably wouldn't take the meeting. That the markdowns for me are the kind of very like it feels like a futuristic AI company visually, but it doesn't seem like a deeply technical team, or it feels like a cybersecurity pitch deck. Like this is classic cybersecurity imagery. And if you're talking about deep understanding of connecting people at scale, this is a very kind of specific random point, but like I would want it to feel more like what Slack looks, the Slack visual identity, or the Dovetail visual identity. Like there's a warmth and you can communicate that connection or that emotion of connection in a very different way to the way this deck is communicated. And so it just tells me like there's not I feel like Nick Detmold has fallen asleep and he's got one of those Simpsons birds that just keeps raising the hand. Nick, just drop your question in Q&A because I'm not going to be able to answer. I'm sorry, until after the chat. So I like that it's short. There's some language in here that just tells me there's a commerciality missing here in the founding team. So 105K organized. I don't know what that means. And then the other example for me was the $3 billion ARR projection was just too far in the future to sort of even contemplate. I hope this business gets here, but that would be, one of the 3 best companies founded in the past 2 decades out of Australia or New Zealand. And then, the traction. So this would probably be a pass on a mix of lack of kind of commercial nous, sort of visual identity, kind of a disconnect there from the mission and how it appeals, kind of lack of traction, and maybe just a single founder. I'd love it to be 2 founders, and 2 of them are technical. One of them's a machine learning expert, and one of them's it just feels like it's going to be a long road to get this product built. So I'll pause there. There's been a bunch of questions that have come into chat and Q&A. So John, tell me if you want me to do this differently, but I figure I'll just jump into them.
No, that's great, mate. If you just go through, there was a couple of that we would already answered, so I've just sort of streamed them through. A few of them are fairly quick ones as well. Okay, cool. So have I ever said yes to a startup which you initially said no to? No, none that I can think of. I have had a situation where I said, hey, the company in its current state with the allocation of equity to each of the founding team members is completely wrong, and so wrong that I couldn't fund the company. There was heaps of equity in the hands of an advisor and very little in the hands of the CEO, is the summary of the problem. So I said, I love the company, can't invest with this current structure of ownership. So thanks very much. But if that changes, come back. If it doesn't, then good luck. But they changed it and they came back and we ended up funding them. So I haven't done that. I think what's interesting is actually that, so the question is, if I say no, do I then go back and say yes? I think what actually happens is if I say no, the founder always at some level really internalizes that deeply.
and they never come back and ask again. So even if I wanted to invest again, that founder, I kind of, unfortunately, by saying no, there's a bit of bridge burning that you do, no matter how much effort you put into the no, or how much you actually like the founder, or how valid your reasoning is. It's always very personal for an investor to pass on you. So I think by saying no, you kind of lose the chance to say yes later. I can say for sure that I've changed my mind on companies, and I know I've been wrong so many times where a company's pitched me and I've said that won't work, or I don't want to invest, and then I've gone back and gone, gee, I wish I'd invested. So, and this job is so intellectually humbling. It's just like every day another company succeeds that you thought wouldn't succeed. And so on balance, I think I'm wrong a lot more than I'm right about this stuff. Yeah, I think actually it's about the founders letting me invest after I've said no before. And then, yeah, unless I meet a founder who doesn't take no for an answer. Yeah, that's a good and a bad thing. Okay, cool. Andrew Norman, thanks for your commentary. You mentioned the non-fiction story. How do you balance the founder story versus the product story? Would you suggest starting this deck with the founder story or a product story? Always the founder story. The reality is most founders won't have a great founder story, but if you do, because it's just hard, it's just rare. Like if I think about Morse Micro, which is a chip company that we've funded, Michael and Andy, the two founders, built the iPhone 6 chip at Broadcom. That was the thing that they did before building this. So like that's the best place in the world to prove that you're a great chip engineer, is at Broadcom building an Apple product. So that's an epic founder story. Or there was a founder in StartMate who had been at Oxford, and like his PhD was like literally the beta test for his startup. So there's some founders that really have that as a strength. And so yes, you should lead with that. When I did my startup, there wasn't anything I could say about my expertise in healthcare that allowed me to do that. So I had to lead with something else. So if you can lead with it, I guess lead with your best story is my advice. Okay, Quinton, I know my question might be general. What would you look at, or what elements will successfully pitch you when you see two non-technical founders? My co-founder is in marketing and business as a senior executive, and I have a background in investment banking M&A. We are building digitally native consumer brands. Well, the good thing about digitally native consumer brands is they're not super technical. And so you're probably in a good space to be doing that. I think what I don't like is where there's a use of funds to go and pay agencies. I just haven't seen that work really well. There's probably lots of examples where great products have been built by outsourced agencies in the early days, but my personal bias is I haven't seen that, and I just out and out kind of, it's almost a blocker for me. And so I think non-technical founders should their first job should be finding a technical founder to help them. I think I'm increasingly biased to founders that can change their product at speed. And so it matters a lot. And the reality is it's going to be a huge markdown for me and for probably a lot of investors when you see non-technical founders. The flip side is if you can achieve a lot and put that into the pitch deck without a technical co-founder and say, hey, we've just brought someone on, then that's a real positive, because then I see, well, shit, you achieved a lot without a technical co-founder. Now that you've got one, imagine what that will unlock. So you can still kind of overcome it, but it's definitely something you'll have to work through. Okay, regarding the team page, you made a point about full-time, part-time, and finding out more. Two of our key team are full-time for other companies. We want to employ them in November. Their roles are significant. We want to showcase them in the pitch deck while ensuring their current bosses don't find out, oh, how would you show this in the pitch deck? I would resolve it not in the pitch deck, and I wouldn't tell one story in the pitch deck. I think either this is a great idea and therefore everyone should go full-time on it, or it's not. And I think the middle ground is, I think trying to skirt the middle ground and having people not find out, but having them in the pitch. I just think either be full-time or not. It's pretty binary. And I know there are reasons why people can't go full-time in certain circumstances. But equally, being a founder is hard, and it's more than a full-time job for most people to do it. James, so sorry to finish that. So yeah, that whole scenario doesn't sit well with me, and it wouldn't sit well in DD. And so I think wait till you've got it resolved to go and pitch. Do I want to see how capital will be spent? Not really. It's always the same: 80% people, 20% other stuff. I ignore it every time. So some people might want it, but it's always the same. So I've never seen something interesting in that. Yeah. Martin asked, would you expect to see what percentage of equity is being offered for the ask? No, it is a good question, Martin. You should never set the price in your pitch deck. And the reason is that if you set the price, I know that that's the highest price you want, and that you will accept a lower price. So the way to say that is we're raising this much money to grow the business to this much revenue. I think that's the right framing. And then I think you can let the market decide what the valuation of your company is. And right now, the market is rewarding incredible valuations to founders at the early stages. Whether that will last for long, I don't know. But don't set the price, because you never know. An investor might give you a higher price. Certainly, if you put a price in there, investors know that's the ceiling, not the floor of where the negotiation starts.
Let's do two more, Nick, and then we'll jump into the other one.
Cool. Mo, how far into the future do you want to see projections? 12 to 24 months. I think everything after that is kind of just fanciful. Darren, I'm sure Canva didn't predict the success that they've had. Canva didn't proceed. What level of ambition do you look for, e.g. revenue forecast? Okay, so Canva did predict the success they've had. So Mel has written a Medium post on this, and I think in that Medium post, Mel's the CEO and founder of Canva. She literally wrote all the products that Canva would ultimately be. So she knew from day one where she wanted Canva to go. It's one of the special things about Canva. But she didn't say it in a revenue stamp perspective. She said, here's all the products that Canva will ultimately be, and she's shared that, I think, publicly. So yeah, that's an awesome example. Let me just make sure I answered that question. So yes, Canva did predict the success they had, but in a different way to maybe how you think. Okay, Portio Technologies, capital raise 2021. Transformative AI for global contact centers. So you probably know my visual identity and kind of design bias at this point. I don't like this image, but we'll keep going. Scott and Susan, CEO, COO, CFO. Lots of words. What I look for in these pages is like places that you've worked before, and numbers. So like number of people that you oversaw, size of the business that you oversaw. And so adjective field descriptions I tend to ignore. Customer service is a big market, it's growing fast. Something from Deloitte. Customer service centers have a problem, we can help them. Okay. We use AI to analyze text in emails, provide insights on what matters to customers, and take actions. Okay. I'm not sure what these refer to. How customers like to interact. Not sure what this is. Competition is CRM, analytics tools, and bots and portals. Okay. Something about the competition, what customers tell us. So what are we here? This is slide, I don't know, quite a slide, we're 12 slides in, and I still haven't seen a dollar sign. So I'm still, at this point, all I really care about is like, has this business got, like, is this, I was looking, I'm either looking for a team where I can see the credibility, and I don't know from that team slide the backgrounds of the founders, so I can't judge, was the credibility here would have been, leading customer success at Salesforce, or there's ways where you could be like, this person has domain expertise, and that wasn't clear from the team slide. So now I'm looking for revenue, which would be the other way that you could imply domain.
Mate, sorry, I should have entered with this. So the Portio team put it up, and they've redacted the financial slides. They weren't comfortable having those on the screen. So there were some. I can't tell you what they were, but that probably, and I don't know where they were going to be in the deck. So, Portio, take the feedback for they should have been at the front when you do put them back in.
Basically, it should go team, traction, and traction is dollars. But let's keep going. Well, customers, our stories. Okay, so see, that's interesting. So we have paying recurring revenue customers in AU and NZ. Like that is slide 3, not slide 13. Our customers, 8 customers, lots of emails, ARR, cool. And this is where the redaction comes in. So again, this is slide 2. So that's great. 8 customers and some ARR. So that's awesome. Yeah. Anything above 0 is a huge achievement. Sales strategy. Ideal customers are very large. Okay, so I guess just worth opening up my thinking here. So I think of like small customers as maybe like $1,000 of revenue a year, and medium customers is like 10 to 25, and then large customers is 50 or 100. So what this tells me is this is a company that's going after very large companies, which means that their sales cycles will be like 6 to 12 months, and they'll have to have a big sales team knocking on doors to kind of handhold this across the line. So it sort of fixes your mind to the kind of company we might build here. So doing a capital raise to get to 15, yeah, cool. So you're raising to get to this much revenue and this many customers, it's just simple, and we're safe, that's fine. Cap and discount, that's fine. Next round. Yeah, this is worth talking about, the sort of talking about potential acquirers. I think we have a particular bias on this at Blackbird, which is that the hard thing is not selling a good business, the hard thing is building a good business. So we kind of discount early stage companies who talk about being acquired because, like, if you think about Facebook's journey, one of the critical decisions that the CEO made was saying no to the Microsoft acquisition at $1 billion or whatever it was. You know, the only way you get to build a $1 trillion company is saying no to selling it for $1 billion. Or when the Facebook CEO emailed the Snapchat CEO and tried to buy Snapchat for $3 billion, Evan said no. And you know, the way to build a $40 billion Snapchat is to say no to the $3 billion acquisition offer. So I think we feel very biased against founders that are thinking about how to get acquired early on, because if you build a good company, that will be easy. And if you don't build a good company, then it'll be a moot point. So my advice is don't talk about potential acquirers in your pitch deck, and acquirers is missing a C. Big aspirations. Again, big aspirations needs to be in dollars. Existing shareholders. I don't usually see cap tables in decks, but it's really good to see that because you know you can just, what you want to see in an early stage company is the founders own the vast majority of it. And by vast majority, I mean 65% and above. Financial case. I don't generally, you know, these can usually be a single sentence. And you don't have to share these in a pitch deck. You can share them in an Excel spreadsheet after the meeting where you've shared your vision. Be sort of the order I would do it. Same with these. This can just end up being a sentence or a couple of dot points, and then thank you. And it's, yeah, cool. So it's tough, right? Because some of this stuff was redacted. How many slides do we end up? I think this deck is 24 slides, and it could easily be 8 to 12. I think we can do a much better job of talking about the credibility of the founding team based on their backgrounds. Like, I get the sense as you read through the deck that these are pretty experienced operators, but I don't think they've told that story in a compelling enough way. There's a lot of external, like Deloitte and Opportunity and stuff. And really all that matters is customer service a problem? Yes. And the proof of it is we already have a bunch of customers that are paying us. A big input to my decision making would actually be one of the redacted points, which is how much are those existing customers paying? Because if there's 150 grand or whatever it is that you're going to be charging a year for customers, and the first 8 customers you're at 75 grand, that's awesome, because you're like you're already proving out your thesis versus, hey, we have our customers and they're paying us 10 grand a year. Then you have to sort of dig into why. Yeah, so that's the key number, but I understand the reason for the reduction. I think visually could be 2 or 3 times as good very easily. Find a designer on any number of platforms to make this just a little bit more visually compelling. And yeah, customer service is a big problem. We have a bunch of paying customers. We think there's a heap more like them. Here's how we're going to get them. Here's our background. Here's why you would believe it. And yeah, probably yeah, you'd get lots of meetings. I think this is a deck that could be turned into a deck that would get a lot of people to take the meeting, put it that way. Again, probably worth saying, like, I would struggle to get super pumped up about this problem. You know, you want an investor that wakes up thinking about the problem you're solving, just like you do. And so there'd be a chance I would pass on this, that I just wouldn't be a fit in from like a passion and alignment standpoint. And that's a good thing for you. You don't want investors who are only vaguely interested. But you know, this feel pretty confident this is going to be a good business one day. Question is just, is it going to be great? And you know, I think there's probably a level that this deck can go to with refinement, redesign, and there's just punching through a little bit more the key data. John, you happy for me to answer some questions?
Yeah, Nick, that would be great. I mean, we've got about 5 minutes left. Again, really appreciate you actually doing the reverse, you know, expanding out your pretty fast process just for the benefits of people sort of seeing the processes. So.
Okay, so yeah, so this is if I got let's use the Amplify decks for sure. So this is what it would appear in my inbox, and I'd go like this: no $, founder not sure, no $, no $, market side, no $, no revenue, 11 pilot customers, go to market, defensibility, closing. Like, that's how quickly you'd read the deck. Obviously, yeah. So when I made the original point, like, that's the sort of time that you have on each slide. You know, it's a matter of seconds to draw me in, or draw the reader in with a compelling data point. Okay, let's dive in. Actually, I'm going to reward the Q&As. What are the top biases you watch out for in yourself when reviewing the decks? I think I probably would miss out. I bet there's a bunch of amazing founders who are crappy at design. And my bias for pretty decks would be work against me. And I'm always a bit nervous when I have a really technical deck in front of me that's trying to explain to me a science or engineering problem. I'm not technical myself, so I go, oh, am I a good judge of whether this is you know, a great technical person or not? You saw that when I read the Wing deck. You know, there's a little bit of shit, what am I looking at here right now? So that's one I'm always a little bit nervous about, and that's where I lean on my more technical partners and say, hey, this looks interesting, what do you think? So that's where having smart colleagues comes in handy. Do you invest in companies that don't have any revenue generated? Yes, that's my dream. That's the best time to invest. What did I lead with, if not relevant experience? Good question. You have to go back and have a look. I think probably revenue. I'm not sure. Is an appropriate ask for Blackbird to help you find a technical founder? No. It's not that it's inappropriate. It's just like, you figure that, you know, we always try and think about trying to invest in founders that are so good that they don't need our help, or where our help isn't that useful. You know, that's usually a good sign of the capability of a founder. And one of the first tests of your ability to be a great founder is to recruit a co-founder, because it shows all the skills of storytelling and convincing that you'll do with investors, customers, and teams. So I absolutely think that's something that you should do before you pitch us. That said, StartMate has an amazing program that's helping with this. Hey John, are we hard stop in 1 minute? I can go another 15 if you can stay on.
So it's entirely up to me. Not entirely up to me. It's entirely up to you, mate. If you've got 15, I'm sure the community would be extremely grateful to get through these questions.
Yeah, awesome. Let's do it. So why would you give this startup 30 minutes after seeing this deck? So Wing, probably. Amplifier, probably not. Apportio, probably not, but only because I just am not personally passionate about the problem that they're solving. Like, I think if the same question was asked, like, do you think an investor, like, you know, an insert average investor, I think I'd probably say the same thing. I think that the average investor would take the Apportio meetings. I think probably under those redacted slides, there's some pretty impressive numbers. Who or whom would you approach to help a company prepare a pitch deck? Marketing? I mean, you write the deck and then just get someone who has a great eye for visual design to do it. There are lots of those people out there. How interested are you in competitor analysis? Everyone differs on this stuff. I'm 0% interested. I just don't care. Like, if it's a good idea, there'll be competitors. If you say there are no competitors, then you haven't looked hard enough. Yeah. Market risk, product risk, execution risk. Which of the above is your main criteria in assessing these pitch decks, or does it differ when different industry sectors are involved? I don't think in those terms. I don't think about market risk, product risk, execution risk. I'm literally just going, is this a great founder, and is this a business I could see myself waking up for the next 10 years working on? For a SaaS business, what is your minimum ARR and growth rate that you want to see for a Series A? Let's call it $1 million of ARR and 100% year-on-year growth. And should this be upfront following the people team slide we spoke about earlier? Yes, because if you're growing at 100% year-on-year, then that's a good story, so tell it. What kind of due diligence do you do if you're impressed with the deck and want to learn more? Actually, the best answer to that is on our website, where you can see every question we ask about every investment that we do. I'll try and get a link to it. If not, someone can just drop a link while I'm chatting now. It should be easy to find. Do you consider pre-revenue investments? Yes, every day I love pre-revenue investments. Is there a particular industry you're especially excited to invest in the next year or two? No, I'm not restricted by any industry. I'm just looking for awesome founders. When you say visual impact, are you looking for visuals that support the message or just look really slick? Well, I'm looking for visuals that don't reduce the overall impact of the story. And I'm using design as a proxy for founder attention to detail. Great insights. Thank you. Thanks, Grant. For SaaS businesses with some traction, do you have any benchmark on what great looks like in terms of ARR growth, NPS, retention that would pique your interest? Sure. Don't hide this question for a second while I go through each of them. So ARR growth, these are all very broad, right? So no, SaaS businesses come in all shapes and sizes, but you look for 12 to 24 months to get to $1 million of ARR. Then you triple to 3 in the next year. Then you triple to 9 in the next year. Then you double to 18. Then you double to 36. So that's what's called the triple, double, double. So there's that sort of as a baseline in the back of my mind. I always think about NPS minimum being 50 and excellent being 65 plus. I always think about net revenue retention as like 110 being good and 120 being great. And I saw 184 once and my eyes popped out of my head. Yeah, I think that's it. ARR growth and retention. Those are the ones that I look for. How do you think the way you analyze pitch decks has evolved during the time at Blackbird? Well, coming from a newly minted Blackbird intern, I have just got more trust in my instincts over time because I got to pass on stuff, see whether it was good or not, see what I got wrong. So I think the lesson has just been just that I'm like directionally in the right space there. You said you wrote 10 term sheets. How many other rounds did you participate in as the non-lead investor? Good question. 1 is the answer. David Jones, do you need to see the unique go-to-market figured out for SaaS? E.g., Culture Amp had a great approach to building HR community. What a great insight. And yes, one of the magical things about Culture Amp is the people geek community. We do love to see unique go-to-market because anyone can spend money on Facebook. That's a bit unfair because not everyone can actually do that, but very few people have the vision to build a great community. So Culture Amp's People Geek community, if you look at Dovetail's Slack community of user researchers, I think that's another great example. What are some problems you are excited to see being addressed? Do you see any clear gaps? I love everything around creative, like what's called the creator economy. So people that have been creating platforms for individuals to be rewarded for their creativity. I love seeing climate change stuff. I love making the world of work a better place. And I love healthcare. Be the 4, I think. So once a founder secures a meeting, what next? What are the next steps? Well, it's just like 30 minutes to get to know you and to ask you all the questions that came out of your deck and to find out your story. And then just to kind of have an initial read, like, could we work together for the next 10 years? And could, you know, if you call me on New Year's Day to tell me that your CTO has left, am I going to take that call and be happy to spend half an hour with you commiserating? What makes you really excited to take a meeting as opposed to taking a let's see meeting? Great question. Don't know. Sometimes a pitch deck will just come in with an angle or a founder story or a traction where you just go, God, that's just so awesome. There was a founder that pitched me the other day, and his daughter had a certain kind of medical condition, and he started a Facebook group to create a support community for other parents of children with that medical condition, and then he built a digital publication to educate people about that condition, and then he built a product that he was using to like improve the way he managed his daughter's condition. And so I like that one was like a 10 out of 10 excitement to go and meet him and hear about his story, because it was this mix of connection to the problem in a space I love, with like a founder that had done so much with so little. So those are the kinds of meetings that I get excited about. How to support you explained sounds beneficial. How much of an impact on success do you see Blackbird has on the overall success of the business? Oh, it's a great question. I think most people honestly think investors make more of a difference than they actually do. I think there's a lot of hot air about how valuable investors are and not enough realization that most of the value, I'm talking like 95+% of a business's success just traces back to the founders and the team they build. I think we're super valuable. I think the capital we bring can be amazingly transformational. I think in certain moments, our support can be the difference between success or not. But the credit should go to the founders. What sold us on Carted? I mean, lots of things. That was a ridiculously big vision and a founder in Holly that we'd admired for a long time. And then the pairing of Holly and Mike was pretty super powered. So Carted is one to watch. When you say you're interested in pre-revenue startups, what percentage of equity would Blackbird ask for in that situation? And it depends. We usually take a 10 to 20% ownership position in the first round of funding. And it just depends, but 10 to 20%, 20% is usually it's very rare. I don't think you could find an example where we took more than 20% with the first investment. Mick Levinskas, hello Mick, you legend. How do you look at advisory or board members at each stage? At the early stage, advisors need to be investors or else they shouldn't be in there. Board members, I generally don't like to see a board early because like there's no governance, there's nothing to govern in the early stage of a company. There's sort of no company really. So I think advisors who invest is a great thing. Advisors who don't invest is a bad thing. And boards too early, I think, can actually limit the upside potential of a company. How important or not are cash flow forecasts? I don't think important. I think they're just like that. So I don't pay much attention to them. Can you describe your initial interaction with the guy with the ill child? What won you over with your initial bias? It was a pitch deck. No, it was a LinkedIn message. Sorry. He sent me a LinkedIn message and he said, I have this condition, my brother has this condition, my daughter has this condition, and I've built a business with no money that makes this much. Like I have no fundraising, but I built a business that has this many customers. I was like, whoa, that's amazing. Chris, what sold me on Nura? The first time I put on the headphones, sold me on Nura, and then just how incredible that team is. Founder dilution increases over multiple rounds. Any range of founder holdings at different rounds you look for? No, I should probably go and look at this data, but we look at a global benchmarking database of founder ownership at different stages, and at every round, I just have a look at that and say, are we still comfortable based on the data that the founder has enough of the business? And then I actually recently had conversations with two separate founders. I said, do you feel like you have enough equity? Because if they don't, like, very hard to fix that. So you want to have that conversation early. You want to fix it early and not late. Prakash, how much? I don't know if this is with Prakash I went to college with in Brisbane. How much crossover do you see between the music artist storytelling and the founder storytelling that you experience now? Your focus on people's story and execution is great, thanks. I would say that when I was in the music business, I always thought of myself as an A&R person, and I was good at selecting great songs and great artists, and that's really similar to what I do now. Founders and musicians is completely different, and the reason I don't think I would have succeeded in music is that the incentives of musicians are just totally different to the incentives of founders. In a lot of ways, the incentives of founders are very simple and easier to understand, and you need certain kind of people to manage certain kind of creative people. Can you talk to a scenario of a pre-revenue company while expecting all founders to be full-time? We have a company in the portfolio called Bardi who raised, I think their friends and family round was $30,000, and they went full-time on it, and they didn't have any revenue. Any quantitative tools assessing founder quality? Is it all gut? Any 360 tools useful? I love reading 360 reviews of the CEO. We don't typically get that at the seed stage. But nothing quantitative early. It's difficult. Quantitative plays into the later stages where we look at culture amp engagement scores, Glassdoor scores. How much do you value a warm intro versus not when deciding to review a pitch deck? It helps a little bit, but I honestly don't care. You know, that example I gave of the founder messaged me on LinkedIn. I don't check LinkedIn messages, just to be clear, but sometimes I do. And his message stood out. I don't care. Like, I think a good founder and a good story will come through on a warm intro or a cold one. It doesn't. I think I'm a good judge of that. Hiring a non-technical founder. How do you know the person has the skills you need? Just get them to show you stuff that they've built, and if you love it, that's the best. And that's how I assessed it as a non-technical person. Like, the answer is in the work, and if you can't understand the work, then you're probably not a good fit. Are you scared off by a sole founder? Yes, but only because I just know what they're going to go through. How much of a difference does a warm intro make for Blackbird? A little bit, not a lot. All right. Hold on,
Mate, legendary. Yeah.
Hold on.
I'm actually just quite tired, and I've said about 7 words in the whole thing, bro. It's been a fantastic session. We've still got 120 people online. You've reviewed 3 pitch decks, like took over 50 questions, and had, as I say, at a peak 150 people there. So really feeling like we've got an enormous amount out of this. Nick, thank you so much for spending the time. It's always a great session, and we'd love to do it again with you at some stage. But I think starting where you started just before we got into it, we'd love to see a few more pitch decks put forward, and a few more people brave enough and you know, I guess grateful enough in some senses to take the opportunity to get someone who's doing this every day to just, you know, take a look. It didn't seem that painful, I don't think, folks, to those that let them do it, and I'm sure they got a lot of value out of it. And so, Nick, the last word is yours. Again, thank you so much. Anything you'd love to say to the community before we wind up? Greatly appreciate it.
Well, again, it's a huge honor to have more than 100 people spend an hour with me. I really do value that time and that attention, and hopefully, like, 1 or 2 of you get a few extra meetings with VCs off the back of improvements that you can make off that session. That would be the dream for me from this time with you all. Selfishly, we are hiring a community lead in our Auckland office. So I've got this, it's all over our Twitter, LinkedIn, blog posts, but please join this wonderful team that we're assembling. It's a culture amp engagement score. The last culture amp survey was 96 out of 100, which tells you it's a really special place to work quantitatively, to answer a question earlier. So we would love you to be the next person that joins us. But overall, thank you to the 3 founders that put forward their stories. That was pretty awesome. Thank you for the time together. I really, you know, again, just it's a great privilege to be able to look into the work that each of these founders is doing, and hopefully someone on the call was inspired to make a small change to their own pitch deck, which hopefully gets them more meetings and ultimately more investment so they can go and build their businesses. So thanks so much.
Cool, mate. Thanks very much. Thanks, everybody. See you again next time. Cheers.
Bye.